Welcome to the Bangkok Bareback, and I'm your host again with the most. I don't know my name. Anyway, that's besides the point. I am the Dermatillomaniac, you are someone else, and today we're going to be talking about hard investing versus soft investing. Get me the boner, spider. Oh. Anyway, hard investing versus soft investing. What is the difference? Hard investing is active investing. Think of stock trading or buying a gun and holding it for the apocalypse. That is actively, it's preparation or it's active. That's what hard investing is. Hard as a rock. Hard as, oh yeah, bend down a little harder, okay? Okay, soft investing is like an index fund, very passive, but very, very effective. In fact, you're more likely to make more money in the passive strategy. Low fees, low turnover, very, very passive investing. And this is a very, very important concept, especially for the Bangkok Bareback, the series that I've making. First episode we talked about due support. Well, today, this is the second episode, we're talking about hard versus soft investing. So I'm going to give my explanation for what I do personally in the stock market, and then you guys can go and do whatever, but I personally love the stock market. It's incredible. The amount of performance you can get just by holding on to an index is incredible. Now, right, there's a lot of caveats to this, and I'm going to give my explanation for what I do exactly, or not what I do exactly, but why I buy the things I do. So there is a stock called VT. It's sort of a stock. It's an ETF. It trades like a stock. It's an ETF, exchange trade fund. It's an index fund that trades like a stock. That's basically the best way to explain it. And the VT is 9,000 stocks in the world. Now, if you look in VT, 60% of the equities in VT is U.S. market. In the future, however, I expect that VT will be less and less U.S. over time. Maybe not immediately, because U.S. has actually gone up in terms of the equity account. In VT, it used to be 55%, now it's 60%. But I expect it to be under 50%. Because think about it, we're only 25% of the world's output or input, whatever the economics is, GDP in the world, the global, gross product, whatever, GDP-wise. We're only 25% of the world's economy in the United States, and we're 5% of the world's population, which is very small actually for being 25% of the world's economy, which is ridiculous. China is about the same actually. China and the US make up almost about 47% of the world's economy. But that's because we transfer resources into actual computers and actual materials. We manufacture things. Taiwan actually makes microprocessors, which is why Taiwan gets so good with China and us. Anyway, that's besides the point. I'm going off on a tangent. So why I buy VT is because you look at the numbers. Okay, we're 5% of the world's population. We're 25% of the world's economy, and we're 60% of the world's equities. Do you think those numbers will change in the future? Do you think the rest of the world will catch up? I do, actually. I think we're going to be 4% of the world's population, because I do think other countries are going to go a little bit faster than the U.S. I'm sorry, we're just an aging society. We have a bunch of baby boomers retiring with Social Security. That's the baby boomers are going to be dying in the next 20 years, so it'll probably be Gen X or whatever you call those guys. And then you're going to get, and there's going to be a lot of those guys, and then you're going to get, let me think here. You're going to have, 4% of the world's population, and we're not going to be 25% of the world's economy. I highly doubt it. I think we might be 23% to 20%, which is still a lot, don't get me wrong. But 60% of the equities, I highly doubt that. Based on the current growth rates, if we continue like we are, we will continue to be 60%. Based on our what we've been getting in the stock market, yeah, we'll continue to be 60%. But I highly doubt we're going to get the past returns that we did in the past. I think we're going to get 5% returns. We're not going to get 7% like we used to. So it's just not happening. I just don't see us being 60% of the world's economy, or 60% of the world's equities, sorry. So I buy VT because I expect the rest of the world to catch up, and I do think VT will beat VTI, which happens to be the total U.S. market in ETF form. That being said, The expense ratio on VTI is much lower by like half, I think. Like buying U.S. equities does have more benefits, I think, than downsides. Like just buying a general U.S. fund might be better than buying a global fund. But I'm betting a little bit against the U.S. market by buying everything still. I'm still investing in U.S. stocks, but I'm buying everything. You can't say I'm not investing in the U.S. I definitely am, 60% of my money, in fact. So, but again, if the rest of the world grows faster than the U.S., eventually the equities will be more international than domestic. That's just the way life is. So, and again, with people like, I feel like, with the soft investing, what I call index investing, soft investing, it's actually pretty active in terms of the amount of money you're putting in. It's active. It's a lot of sacrifice. You put in 5 to 10% to 25% of your paycheck into this thing, and you just trust it. For the most part, you trust the market. It's just kind of dumb, but it actually works. It's incredibly successful, I think. Just looking at the numbers, you're just not going to beat anything like it. I mean, unless you get like a small business and have a higher return rate. Unless you have an idea that millions of people haven't come up with yet, I highly doubt you're going to beat everybody. You know what I mean? In terms of return rate, which is why I'm not smart enough to be doing that. So that's why I buy VT. But anyway, that's besides the point. Now let's go on with active investing. So let's say, hypothetically, that the bond and stock markets collapse. I didn't even mention bond funds, but we might go into that. We might not. I don't know if we have time to do it. But let's just say, hypothetically, that, the boner spiders come and bite everybody off, They bite every single person's wee-wee off, or whatever, They're jerking the weens, and then the boner spiders, I'm bit by a boner spider, the apocalypse comes, the stock market collapses, right? Well, then you should be investing in hard assets. I don't mean like gold or silver, although might have put a little bit of that in there, but do not buy internet assets, right? Don't buy cryptocurrency. That's stupid. The reason why is if, let's say there's an apocalypse and the bonds and stock markets collapse, you think the crypto market's going to do very well? No, probably not, because the crypto market's actually attached to the stock market. There's actually stocks that invest directly into crypto, and also the cryptos rely on the internet. The apocalypse happens, guess what happens to the internet? It's down. You can't access your crypto. I'm sorry, crypto is not a good way to invest. But anyway, that's besides the point. Even if you can, let's say all the hard drives collapse, like the internal data is corrupted in every single hard drive in the world. Cryptos is not good. I'm sorry. You can't convince me that it's safe. It's just not. Gold and silver is slightly more safe. But guns and bullets is the safest. So you get food, water. Like, think about there's the rule of 3, right? I've talked about this in other videos. But the rule of 3, 3 minutes without air, you're most likely going to die. 3 days without water, you're most likely going to die. Fresh water, fresh, clean water. And 3 weeks without food, you're most likely going to die. And so, with that, and then guns and bullets can be used to take all those resources. And so that's why you invest in all 5 of those things: guns, bullets, air, water, and food. And if you're doing actively managed stocks, I do consider it hard investing, even though it's short-term preparation rather than long-term apocalyptic investing, which is why there's a difference between hard investing in terms of actively managed and then preparation investing, which is hard as well. It's hard because it's physical. You know what I mean? It's hard because it's stone or hard. Bend over a little faster, a little harder. Anyway, this is the Bangkok Bareback. Oh, welcome to the Bangkok Bareback. Anyway, so despite this, despite my creepy mustache talking about all this nonsense that I've just brought up, what should you do? Well, obviously you should do both soft investing and hard investing. There's no wrong way to go about things. If you're crazy like my grandfather, then hard investing is generally what you're going to be doing anyway. You're a collector of guns, collector of boats, cars. I don't know why he does that, but he collects boats and cars, which are depreciating assets, which are not investments. Guns are semi-appreciating because, let's say, if the government collapses, I guess you can, make your return on investment really quick. But for the most part, you want to make sure you're safe in the world of investing, and diversification is the number one way I believe you can be safe. I don't think diversifying in every crypto is going to make you very safe. I'm just going to tell you that. Diversifying in bonds and stocks will make you safe in terms of there's still a lot of market risk because the market can totally collapse. I generally can. It happened in the Netherlands 400 years ago. It will happen today. I mean, the stock market still exists in the Netherlands, don't get me wrong. But there was a time when there was a huge market crash and 90% were wiped out. And it took many years to recover in the Netherlands. And, if that was happened 400 years ago, what could happen today, The market risk is already a lot. So that's why you do hard investing, because you never know. But, again, you over-diversify, you diversify into the global market in terms of bonds and stocks, and then you have guns or whatever laying around different states, and one state collapses, you go to the next state. If all the states collapse, well, you use your guns to take the food and water. That's hard investing for you. I don't know. This is a very critical, very hypocritical video. I don't know what very rude video, I would say. You're being rude to people by doing that. But it's the best way to survive. And that's all that matters in life, right? Not your fellow man, but just surviving. And so that is what hard investing, bend over a little faster and harder, is, Meanwhile, soft investing, you need that boner death spider in order to bite you, in order to get yourself a boner to be hard. But yeah, anyway, that's besides what this is the Bangkok Bareback. And obviously this is the second episode. And I was going to do something different for the second episode, but I realized that this was such a unique topic that I had to do it. I have to convince people that my investment philosophy is funny enough to explain to people. Even though it's very, 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 very controversial, I would say. It's still very, very funny. And the way I explained it, hopefully, will click in your mind and then will actually convince you to invest some of your money into all these things. I'm not guaranteeing that you'll get a return on anything in life. Nothing in life is guaranteed. I am going to make a third episode that talks about what happened when culture changed in England compared to the United States. And you could see like that culture change that happened in England. That's why you do hard investing. That culture change that happened in England was very, very bad. And I'm seeing it in England, and it's been a 50-year process, and the United States didn't change as rapidly as England did. Or not England, I should say the United Kingdom in general, but England in particular in the United Kingdom has really gotten rid of most of their culture, of their natural rights. Well, the United States has kept most of their natural rights. So that's why you have to do the hard investing if you want to keep your natural rights. If you don't, if you just want to be taken advantage of, if you want the state to have a monopoly on guns, okay, go ahead. I don't really care. But I'm just telling you that this, the culture of England is coming to the United States. We were impacted by the English Civil War here in the United States. That's why we actually kept the Second Amendment. But there's a whole thing I would like to, whole rabbit hole one day I'll go into in this third episode. But yeah, I think that you guys just have to keep in mind, like, just think about the boner death spider and then think about bending over hard and fast. And welcome to the end of the Bangkok Bareback. Hopefully you enjoyed this video. It was kind of short but sweet. And do support, just do things you need to do, just like I said in the first episode with do support. Yeah, it's just do this instead. Do this investing. Goodbye.